betting against terror. Stock markets actually higher this week. World markets and democracies remarkably resilient in the face of terrorism. History shows investor reaction to terror attacks is usually short-lived. September 11th, the S&P 500 tumbled nearly 5% on the first day of trading after the attacks, losing a total of more than 11% over the next 11 days. Then stocks rebounded. Within 31 days, the S&P regained all of those losses. The Boston Marathon bombing, stocks slipped 3% in the 4 days following that attack, but were fully recovered 15 days later. The Madrid train bombings in 2004, stocks fell 3% over 14 days and were back where they started in just 20 days. In 2005, the London tube bombings, a shallow pullback and back to where it started just 4 days later. Overall, it usually takes the S&P 500 less than a month to get back to where it was following most market shocks, as soon as investors figure out it's not going to mean a recession. One notable exception, Pearl Harbor. The S&P 500 declined more than 20% in the 43 days following that attack, and it took 308 days to recover. Of course, that event also launched the U.S. into war. The big question is whether the Paris attacks also usher in a new era of war. If they do, and that drives weakness in the global economy, the effect on stocks may not be as temporary as history suggests.